Hey everyone. So today we are jumping into a really interesting source that lays out what it calls a pre-flight checklist for spotting stocks that could be, getting ready for a massive move. All right, let's get right into it and see what this is all about.
I mean, this is the million-dollar question for pretty much every trader out there, isn't it? How in the world do you find that stock before it goes on a huge run? It is so tough to filter out all the noise and find those real gems. And that's exactly the problem that this framework we're looking at today tries to tackle.
So instead of just throwing darts at a board, the idea here is to use a systematic 5-point checklist. It's designed to be a methodical way to analyze a stock, to check its health, and to gauge its potential energy before it hopefully takes off. So let's break down every single point on this list.
Okay, first up, sign number 1 is all about the upward trend. The idea here is really simple, but it's absolutely crucial. A stock can't explode higher if it isn't already pointed in the right direction. You gotta have this foundation in place before anything else can happen.
Now, to really define that trend, the source gets specific. It uses a tool called the exponential moving average, or EMA for short. Now, what's cool about the EMA is it gives more weight to the most recent price action. And the source actually calls the combination of the 11 and 21-day EMAs a launchpad. I think that's a perfect analogy. It's this zone where a stock can build up power right before liftoff.
So in the real world, what does this launchpad actually look like on a chart? Well, the checklist calls for 2 specific things. First, the price has to be trading above its 50-day moving average. That confirms the bigger overall uptrend. And second, you want to see the price consistently bouncing off or kind of hugging that shorter-term 11 and 21 EMA zone. When you see that happening, it's a huge sign of strong, sustained buying interest.
All right, let's move on to sign number 2, the volume footprint. This is all about becoming a detective and following the clues left behind by the big institutional investors. You know, what people call the big money. Volume really tells the story of where the real interest is.
A super important concept here is something called the pocket pivot. So what is it? It's a very specific volume and price pattern that shows up while a stock is just chopping around sideways in what's called a base. Basically, it's a day where the stock moves up and the volume is higher than the biggest down volume day from the past 10 days. The source argues this is a super subtle clue that big institutions are quietly buying up shares before anybody else notices.
And, the source doesn't just mention this in passing. It flags this pocket pivot signal as extremely important. So when you see that kind of emphasis, you really have to pay attention. It's one of those little details that can make a huge difference.
So digging a little deeper, you're not just looking for one of these. You're on the lookout for multiple pocket pivots inside that consolidation. And to really hammer the point home, the source points to the up/volume ratio. If that ratio is greater than 2, it means the volume on up days is more than double the volume on down days. I mean, that's just a crystal clear signal of overwhelming buying pressure.
Okay, on to sign number 3, the coiling spring. This is such a great metaphor, right? It perfectly describes how a stock's price action can tighten up and the volatility just shrinks right before a potentially huge move. It really is like the calm before the storm, where all that potential energy is getting stored up.
And here you can see the huge difference between what you're looking for and what you want to avoid. On the one hand, you have a clean setup. You see this tight, orderly price action, shallow pullbacks. It's constructive. On the other hand, you have a noisy setup, just wild, unpredictable swings, deep, scary drops. The framework is very clear. You want to avoid that noise and focus only on the stocks that are quietly coiling up.
Okay, so we've got the trend, we've got the volume footprints, and we've got that tight coiling setup. Sign 4 is the trigger. These are the specific things that tell you the breakout might be happening right now. This is the moment of ignition.
The first part of that trigger is relative volume, or RVOL. So this isn't just about high volume in general. It's about volume that is unusually high compared to its own recent average. It's a clear sign that something is different today, that a big crowd is suddenly showing up to the party. And the specific number the source says to look for is an RVOL of 1.5 or higher. What that means is the volume on the breakout day is at least 50% higher than its normal average volume. That's a huge surge, and it's a real signal of conviction from buyers.
The other trigger has to do with ADR, or average daily range. This is just a simple measure of how much a stock tends to move on a typical day. It helps you find stocks that have enough juice to make a big move, but aren't so incredibly wild that they're basically untradeable.
And again, the source gives us a very specific, healthy zone to look for. an ADR somewhere between 2.5% and 8%. If it's below that, a stock might just be too boring to make an explosive move. But if it's above that, it might just be too erratic and way too risky. This is the sweet spot.
All right, let's bring this all home with our final sign number 5, the market context. Look, a stock with a perfect individual setup doesn't exist in a vacuum. It absolutely needs the support of the broader market. You want to be riding the right wave, not trying to swim against the powerful tide.
So what does that good context actually look like? Well, first, the stock should be showing relative strength, which means it's already outperforming the market as a whole. Second, you want it to be near its highs, specifically within 30% of its 52-week peak. And finally, you want to see that stock knocking on the door of a resistance level multiple times. Each time it tests that level and doesn't sell off hard, it's just building more and more pressure for that eventual breakout.
So when you put it all together, you get the full 5-point pre-flight checklist. And you can really see how each step just logically builds on the one before it. You start with a big trend, then you look for the institutional footprint, then the coiling price action, then the immediate trigger, and you cap it all off with confirmation from the market context. It's a really powerful, layered way of looking at a stock.
So I guess the big question at the end of all this is this some kind of magic formula for guaranteed success? Well, probably not. I mean, no system is ever going to be perfect. But maybe a better way to think about it is as a framework for seeing. A structured way to look at the market that helps you spot patterns you might otherwise totally miss. It gives you a very specific set of clues to hunt for when you're searching for that next big mover.